Welcome back to our How to Trade Cryptocurrency series. In this episode, we're going to be taking our first few steps into how to read a cryptocurrency chart technically.
In this case, we're talking about Bitcoin. Is this Bitcoin run that we're seeing now?
Bitcoin and crypto bears are Bitcoin bulls. If you look here on the chart around, it's sort of just shy, just underneath 42. Here is why the cryptocurrency...
This is big. This is significant.
Okay, first things first, candlesticks. Now, what exactly are candlesticks? Well, they make up what you're looking there technically on the chart of a respective cryptocurrency. They display information about the price movement for that particular cryptocurrency. So these candlesticks, let's talk about what exactly they are. So we have a body of the candlestick, the main part of it. The lower part of that body of the candlestick is where the price opened in that time period. The top part of that is where it closed in that time period. Now you'd see with a candlestick as well, we have these short, spiky things on top and at the bottom. They're known as wicks. So the wick to the upside is the highest point that the price produced in that time period. The wick to the downside is the lowest point that price of that asset hit within that time period. Now we're going to go over time frames down the line, but that's just to give you understanding what the candlestick is in terms of what it represents there. Now you'd notice on a number of sources, the typical colors will be green and red. The green represents where the buyers are in control of that in that particular time period. The red shows where the sellers are in control. We can also know these as, in terms of other trading terminology, the green would be by the bulls, the red would be the bears. Okay, so we've got bulls and bears, buyers and sellers with these candlesticks. Now, when you see a bunch of green candlesticks, typically speaking, this means that the buyers are in control. We're in a bullish trend. We're in a buying trend. When we get a bunch of red candlesticks, we're in a selling trend. The bears are in control there. So now I just want to give you a quick couple of examples looking at the candlesticks of when the buyers are in control and also when the sellers are in control. So here, as you can see on the screen record, this is BTC USD, so the Bitcoin price. And then look left with me here. This is when the sellers are in control. Look at these bunch of red candlesticks trending firmly to the downside. So the bears have control of BTC USD there. Now, if you look here, the buyers come into play. So we're trending to the upside. So you know the trend is your friend. So we're buying and the buyers are in control. A nice bunch of green candlesticks and we're pushing to the upside higher. Candlestick formations. What are these? They're types of formations that the candlestick will produce, and it can give us an indication as to whether the buyers are going to come into play or the sellers. Now, there's hundreds of different candlestick formations and patterns, but I'm just going to pick out a few examples on the chart here that I'm going to show you that have proven to be highly effective for me and that are really, really simple. So let's take a look here at BTC USD. My first one I want to show you is where an indication of the sellers are coming into play. So you see how the price was trending to the upside here for BTC, and then we formed this what's known as an evening star. Evening stars appear at the top of the trend and give us an indication that the sellers are now coming into play. And look exactly what we saw. Sellers coming into play, downside. You know, we entered a near-term bearish trend. Now look further right with me. What we've got here, this is what's known as a hammer candlestick, okay? Hammers have small bodies, they've got long legs, or one leg or a wick, and then technical confirmation of these when a candlestick closes above, and then again, look, near-term upside trend, as you can see. Now, let's give you another example, a morning star, okay? Now, this indicates that the sellers are run out of steam, the buyers are going to come into play. Similar to your hammer, but with the morning stars evenly distributed in terms of the wick to the upside and to the downside, and the body just sits in the middle, and then the buying comes into play. Another example here of an evening stars we just went over. Buyers have run out momentum, now the sellers are coming into play. Look, beautiful, beautiful example there. Again, another sort of hammer candlestick there, buyers coming into play. Let's look for some more examples. Here, this is what's known as a bullish engulfing candlestick. A bullish engulfing candlestick. Essentially, it's where the following candlestick engulfs the prior one, okay? Buyers come into play, engulfing this small bear candlestick. Now we've entered a bull trend, as you can see there. And then here's an example of a bearish engulfing. This is a really big, extreme bearish candlestick here, engulfing this prior green bull candlestick. So now we've entered a downside trend. Okay, so that's just some examples there of another little evening star here in the bear trend. So those candlesticks, just give you an example of some formations. Now, as I say, you can type a search into Google, candlestick formations, candlestick patterns, and look at hundreds of them. And it's just about picking and choosing what works for you and integrating that into a part of a strategy. Support and resistance. What are these, Ken? Well, firstly, starting off with support, it's self-explanatory really in terms of the name. Support is helping the price keep it afloat, preventing the sellers from breaking through and exposing the cryptocurrency price to more downside pressure, more bear attack, or more blood, as I sometimes like to say. So what we're expecting when we've got a level of support, if the price comes down, it's been selling, it should cushion the blow, and we should see the price bounce off of that support, and perhaps a bit of buying momentum comes into play. Regarding resistance, it's the flip side, essentially where the buyers are obviously in control, and the buyers are coming up to a key level, key area, and they face rejection, and then perhaps the sellers come into play. So support cushions the price and helps it push it higher. Resistance prevents the price from further extending to the upside and pushes it back down lower. So let's take a look at some examples here, starting off with a support line. Okay, this is just a trend line that you draw. Okay, just put it across a horizontal line, and as you can see here, look at Bitcoin price. Found support here many times. Look, this is valid. You know, we want to see this being supported on a number of occasions, more than two, ideally, to confirm, okay, this is a support level. So various, as you can see, continue to support the price every time we come back down here. If we look to the upside, I marked up a horizontal area of resistance. Look, rejection, sellers come into play. And look what we formed there, a nice evening star at the top of the trend. Sellers come into play. Then we come down to support, and then look again, rejection. We're finally able to break above that. And then look, we broke back through, and again, acting as resistance. And look at that again, a nice little evening star at the top of the trend, selling, and then back down to the support. You get the point. Look, resistance there before managing to break through again. And you can see now we've broken above that resistance, so it should now act as support. Okay, and then pushing to the upside. So you get the point. So support and resistance. Trends. Now, the cryptocurrency's price will be moving in trends. We have upward trends and we have downward trends. Now, in an upward trend, the cryptocurrency price will be printing higher highs and higher lows. So the lows will be getting higher and the highs will be getting higher as we push to the upside. Now, in a downward trend, we're printing lower highs, okay? The highs are becoming lower and lower lows. The lows are becoming even lower as we trend to the downside. So lower highs and even lower lows. So let's just take a look at example here. Again, using BTC USD as an example, Bitcoin. Look at the price trending to the upside. Here's a high. Here's a higher low. Here's a higher high. Yeah. And here's a higher low. Higher high and a higher low. So you see the way we're trending to the upside. And what we could do with this as well, we could even mark up a trend line. You see how we're printing higher highs and higher lows, okay, as we trend to the upside. Now that's an upward trend. Okay, so that will act as support, by the way. That lower trend line that I marked up will act as support, you know, as we went over in the previous lesson, support and resistance. Now here's an example of a trend to the downside. You see this form a high, okay, and now this low, okay, lower high and even lower low, lower high, lower low, you know, lower high, lower low. You get the point as we trend to the downside. Now we can mark up trend lines here, will act as resistance for the upside, and we've got trend lines below that act as support there, support the price in this channel to the downside. Now if we just quickly go back to the upward trend here, you have a channel to the upside if you mark up trend lines. See there or thereabouts, you can see channel to the upside, and this one was a channel to the downside. So that's an example of trends. Time frames. Now, cryptocurrency can be traded on different time frames. Remember how we mentioned earlier in the lessons, we spoke about candlesticks and how each candlestick represents a certain time frame, a certain interval that candlestick has traded within. Now, if you come over my screen, it'd be easier to explain here. Looking at BTC USD, this is a 1 minute time frame, okay? So each of these candlesticks represents 1 minute, what the price has done within that 1 minute interval. And you can see price action sort of very choppy, quite messy to trade with. 1 minute, you'd be in and out of the market, okay? If you're trading that time frame, you'd be what's known as a scalper. The same would be with a 5 minute chart. You can see a little bit more cleaner to trade there, but again, a scalper would be in and out of the market because price action is quite volatile on a 5 minute chart, okay? Then we've got the hour. You can see a little bit more cleaner in terms of the trends here. Remember, we spoke about trends, a little bit more cleaner to trade. Each candlestick representing a 1 hour interval in which it's been trading within. And then we've got 4 hour. Now, this is much more clearer to see. You can see the trends, nice trends forming. On a 4 hour, typically your swing traders will be trading the 4 hour chart, okay? Because they're looking for, ideally, when we're talking about swing, they may hold their position for, a day or two. As you can see here, the swing low on the 3rd of February up to this sort of swing high area on the 10th of February. So holding positions for a few days, a swing trader. And then on the daily, you can really see some nice trends looking at the overall price action of what Bitcoin's been doing. And then again, on the 1 week, you can see nice clear trends. And of course, the monthly charts. These are all the different time frames. Now, in terms of what time frames to trade, it comes down to your own availability, your own lifestyle. If you're trading the daily time frame, then you don't need to be as active in the market as such. You set your positions and forget. Same with if you're trading on the weekly or the monthly charts. Now, as you come down to the lower time frames, as I explained with the 4 hours, the 1 hours, these may require you to day trade, need to be more active in managing your positions, okay? So it's just about getting an understanding of your timings of how you're going to be trading and when you are and how much you can allocate to that, and that will dictate the time frames in which you should be trading. So that brings us to an end of our second episode of our How to Trade Crypto series. Guys, as a reminder, click the link in this description. There is a massive opportunity for you to become an investor in a cryptocurrency exchange, CoinCasso, something that hasn't really been seen before across the industry. Now, remember, with cryptocurrency exchanges, they are profitable 365 days a year. In bull trends and in bear trends, it doesn't matter to them. They are making money, and you can become an investor in CoinCasso with a number of investor benefits such as exclusive NFT drops, merchandise, a ton of other exclusive offers. So check the link in the description. By the way, for EP3 that's coming out, we will be covering trend lines and chart patterns, in great detail. That's it from me. Stay lit. Don't forget to smash up the subscribe button, smash up the like button, give me a follow on Instagram, give CoinCasso a follow on Instagram. Stay lit. Let's get it.